Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And I'm excited to welcome you all to yet another promising edition of the Forex Morning Mastery with Sheriff Daramola. It has been an interesting 24 hours for us in this community. We've been monitoring the GBPUSD, the USDJPY, and of course the XAUUSD. Well, the gold commodity did pretty well for us yesterday, and in fact, congratulations to everyone who was part of that profitable journey. So we are going to be taking another fresh new look at the market today. And in fact, in anticipation of today's trading session, I have conducted a comprehensive analysis on all of these assets on our watch list, and I'm so excited to share them with you this morning. For those who are with me on both my TradingView and Telegram platform, will definitely have gotten a feedback on that one, but for those who are not, we shall be running through it all over again. And for those who are joining us for the first time, you are highly welcome on board. And you might be asking that what is it that you're doing here, or what's it that we do here? Well, we come together as a community in anticipation of both the London and the New York trading session on a daily basis, where we come to review how well if we do have any existing position running, we check on how well it is doing and how well we manage our positions, while we also strategically position ourselves ahead of both the London and the New York session from a technical standpoint. And whatever we do, whatever analysis we do here is based on the follow-up detail to my previous analysis on this asset, which I normally share during the course of the weekend. And in fact, for you to have a better understanding of what we do here, I encourage you to watch my videos on this asset. The links are right in the description box below, so you can check them out and watch them to have an idea of how we got to this point. So once again, you're all welcome on board, and as usual, the first thing we are going to be doing this morning is to check on the economic calendar. And for those who have been with me for a while now, we know now how these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information that will help us to be able to position ourselves in such a way we can capitalize on any move prior, during, and even after this event. Now, on the economic calendar, we are going to be focusing, normally we do focus on high impact event coming in from the economic dockets that affect the asset on our watch list, which are the US economy, the United Kingdom, and of course the Japanese economy. But in the yesterday and today, from what we see here on the economic calendar, it shows that there are no high impact event from any of the economies that is affecting the assets on our watch list. So what I did here was to filter in the medium impact event. And the reason why I do this is simply because of the fact that being the first day of the week or couple of days of the week, it is very important that we look out for any economic event out there that we can use to help strategize and position ourselves ahead of that event. And since there was no high impact event, it is necessary we scale down to the medium impact event and see what majority will be tending towards, at least if there is no high impact event, to give insight and clue into what is really going on in these economies. Now, so yesterday we were anticipating the unemployment rate from the Japanese economy. Of course, the data came in beyond expectations with a deviation of 1.36, which is not a palatable data for the Japanese economy. So it shows that the unemployment rate for the economy increased compared to what it was last month. And as a result of that, we are yet to see the dollar take advantage of that, especially during the Asian session. But we don't know what is going to be happening during the London and the New York session. But we are going to be taking a technical standpoint on that one when we get to the USDJPY. Then today, Tuesday, August 29, we have three medium impact events from the United States economy. The first one here is the Housing Price Index, which is released by the Federal Housing Finance Agency. And of course, it provides an estimated value of housing market condition. It's an important indicator as the housing market is considered as a sensitive factor to the US economy. Now, generally speaking, a high reading is considered as positive for the US dollar. So as we are looking forward to the events from these economies, we also want to be taking that into consideration while we're looking at things from a technical standpoint. So this is a very high indicator that gives us an insight into the US economy. And if you look at the data that came in here, the previous month, it came in at 0.7%. That's for the month of May. Then we have economists projecting 0.2%, which is not a good sign at all. So it shows that there's been a dip in that sector. So we're still going to look forward to what the actual data is, but the consensus here will give us an insight into what to expect and also help us to look at structures and patterns on the chart that will help us guide our next move. Then we have the consumer confidence, which is coming up about 6 hours from now, I think 5-6 hours from now, and it is released by the conference board, and it captures the level of confidence that individuals have in economic activity. Now, generally a high reading is considered as positive, while a low reading is considered as negative, of course. But right here, we do not have any data for the previous month, neither do we have any for the consensus here. So I think this kind of thing normally happens, and like a couple of hours into the event, we might likely see something to look at and project what to expect. Then we have the JOLTS Job Opening. It is a survey done by the US Bureau of Labor Statistics to help measure job vacancies. It collects data from employers, including retailers, manufacturers, and different offices each month. So this is also a labor indicator that gives us an insight into how buoyancy that sector is. Now, from the previous data here, we have 9.582 million, and we have economist projection of 9.465 million. So if we're looking at this, technically it's not something positive, but we're still going to be looking forward to what the actual data is going to be here too as well. So now, with the information we have gathered here, now as technical traders, what we are going to be doing now is to go into the chart, sniff through the current market structure to look out for patterns and structures that will help us position ourselves in such a way that we can capitalize on this move prior, even during and after this event. So with that being said, let's dive right into the chart. Now, before we go in, I would like to see some feedbacks in the comment section. Can we hear me clearly? Is the video good? Please let me know in the comment section. Your feedbacks are highly appreciated, as this will enable me to know that we are all on the same page. And if there are any issues, please feel free to let me know, as this will incite me to make the necessary adjustment to make us have a better experience out here. I see your comment, Mystic. I see your comment, Princess Abulokwe. Good morning to you guys. Thank you very much, and I'm very glad to have you guys around. So with that being said, let's dive right into the business. And as usual, the first asset we are going to be taking this morning, hold on a second. So the first asset we are going to be taking this morning is going to be the GBPUSD. Now, on the GBPUSD, we have a situation here that's looking very indecisive at this point in time, as though we have a breakout of structure, but it appears the participants in this market are still not certain on where the level, where price action is likely going to go. Though buyers have gained a momentum this week, but we are yet to see that traction, as we still see signs that sellers are still in this market. So before we go into the details here, I would like to take us through what really happened, what we saw here during the live session yesterday, and what led to the idea of what we took advantage of. So yesterday morning, we talked about the importance of the key level at the 1.26 area, which I emphasized on the higher time frame. Should I run through that quickly so that we can be on the same page here? So going into the 4 hours time frame, I think we saw this on the 4 hours. Okay, I think it's on the daily time frame. Give me a moment. Horror. Okay. All right, hold on a second, please. Okay, so it's actually on the daily time frame. So we saw here on the daily time frame. In fact, we took into consideration the nature of price action since the beginning of this year, and we were able to spot that price action. No, since the latter part of last year, of course, we noticed that price action has been on a very strong bullish momentum. And to emphasize that, we have a couple of ascending trend line, which we of course connected to give us this structure we have here. And of course, you know how we use our trend lines in this community. As long as price still remains above the trend line, we still want to be looking out for patterns and structures that will support the idea of buying that asset. Now, when we zoomed into the current structure, looking at the space of about 3 to 4 months, we saw how this key level at the 1.26 was a major determinant of price action in the last couple of months. We saw here, we saw this 1.26 area, and in fact, we saw what happened at the beginning of the month of May. We saw it was a selling niche at some point before it was broken to the upside. We saw the retest of structure. Since the breakout of that level, price has been trading above that area, and every attempt by the sellers to break through back to the downside has been met with strong resistance from the buyers, which tells us a whole lot of thing about this level here, giving us signs that buyers are strong around that area and that sellers are always finding it difficult to break through that area. Now, if you look at what has been going on here in the last 3 days now, you will see that price is back into that zone, and we have been witnessing some consolidation around that area, which further emphasized the level of indecision around that point, further giving us a clue into how crucial this moment, this juncture in the market is. Then another thing we emphasized yesterday as regards to that level is how it also shares a beautiful confluence with that ascending trend line. And one of the questions that comes to mind after this observation is, will price action respect this ascending trend line one more time to push price to the upside, that if we start seeing buy pressure around this area to give us an uptrend consideration, which of course is looking very likely considering the long-term bullish momentum in this market. However, we cannot ignore the potentials of sellers too as well, as we could have a situation where price will break down both the ascending trend line and the 1.26 area to incite a sell-off here. So you can see how crucial this point is. Anything can actually happen. Buyers and sellers can both swing the momentum in their favor at this point. So in this scenario here, what we want to be doing right now, we should be going right into the lower time frame to see how market participants is reacting or relating to this current price level at the 1.26 to determine what our next line of action will be. Then when we scale down into the 1 hour time frame that was on at the beginning of this week, this was what we were able to spot here. Now, looking at the 1 hour time frame, we saw how price action was trading around the 1.26 area, and in fact we saw this strong impulsive bearish move that brought price to the downside, and as a result of this, we had a price confined within that range between the 1.261 and the 1.25790 area to give us a flat channel to work with. And one of the things I said yesterday is that since we had a breakdown retest of the support line here, we should get ready to sell. In fact, we sold, and in fact price action moved against us and we were stopped out on that position in a loss there. Then we saw how price climbed above the 1.2600 area to trigger the buy position above the structure. And in fact, in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, in the last 12 hours now, though price moved about 30 pips in our favor, but it crashed back down into entry. And of course, if you had moved your stop loss, like we always preach in this community, that when price action moves significantly well in your favor, you move your stop loss to secure your position. If you had done that, you must have been taken out with a modest size of profit, or at a worst case scenario, break even. Now price is back into our entry zone. How are we still going to be holding on to these bullish buyers here? How are we going to be getting ready to sell? Well, let's look at what the structure is saying on this current market structure. Now, if we zoom out and see what is going on here from an holistic standpoint, it is still very bearish in nature. If you look at how I think I shared this on the 4 hours time frame. Let's run through the 4 hours time frame here. So look at the 4 hours time frame here. We have lower highs in this market, and in fact we finally saw the breakdown of the 1.267 to give us a lower low. And with the way things are, since price still remains below the descending trend line, it's still very bearish in nature. So whatever buy opportunity we are taking here is more or less a counter trend opportunity. Now, one of the things we discussed here yesterday is that if price action breaks out of the 1.2600 area, this could turn out to be a reversal pattern, something like this. And if price breaks out of structure, I made mention that as price move significantly well, we move our stop losses, because we have a descending trend line here, which also shares a confluence with the 1.267, where if depending on how price action reacts to this confluence will determine what our next line of action will be. So if we have a breakout of this area, we look out for more opportunities to buy, of course, or if selling pressure resumes around this area, then this could turn out to be a bearish move. Now, since we had a breakout of the key level yesterday, we said we will be looking out for buying opportunities above that level. Now let's go back into the 1 hour time frame. I needed to show us this so that we can all be on the same page here. So scaling back down into the 1 hour time frame, this is what we have. So we have a situation right now. Price just broke out of the key level, came back to retest the structure, and from a technical standpoint, whenever price action breaks out of a structure such as the key zone we have here, we expect price to come to retest at some point where the appearance of buy pressure will incite an uptrend continuation. So if price remains above this level, technically we want to be looking out for buying opportunities. But one thing I would like us to say here is that if we look at around the 1.26300 area, we have been seeing some selling pressure around this area. The same thing has been happening here. So I would like to acknowledge that level on my chart. And in fact, it has been a major determinant of price action since last week, Wednesday. So we have the 1.26300. So we have the 1.26300 level marked out. So personally, for me, to feel comfortable buying the GBPUSD today, I would need price action to break out of this level. But that doesn't mean we should not capitalize on this opportunity here. So we could still place a buy stop order anywhere above the 1.26, 1.261-ish, then place another buy stop order above the 1.263, which shares a confluence with that descending trend line, we identified on the higher time frame. Now, if price action goes on to break out of these, a breakout of the trend line will be a good sign that that trend line may no longer have the capacity to continue to negate that bullish attempt. So that's case scenario, we will feel confident buying, adding more position. A further breakout of the 1.267 will welcome more opportunities to buy. So this is how we shall maintain a bullish bias here. However, if we join that bullish momentum, please note that we want to be on standby to move our stop losses accordingly. This is more or less considered to be a counter trend opportunity. Price still remains below the descending trend line, so we want to be very, very careful. Not until the trend line is broken to the upside can we feel confident to add more position to that trade. So right here now, if price moves significantly well and continues to climb, move your stop loss as soon as price gets into the zone, and let's see how the market would react to that trend line. A breakout of the trend line will welcome buying opportunities, while selling pressure below the trend line will welcome selling opportunities. So let's keep this in mind and let's note how important this current zone is. So you might want to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. Now, another thing that we have here is an ascending trend line to guide our moves going forward. So right now we have an ascending trend line here after connecting the series of higher lows. So to help us feel comfortable in that buy position, if price continues to climb high, we use this trend line as a yardstick. So as long as price remains above the trend line, we feel comfortable in that buy position. Now, the only condition here that will make us want to sell is for price to drop below our key level. Remember how we use our key levels in this community. When price drops below the key level, we want to be looking out for patterns and structures that support the idea of selling the asset. And one thing about the key level we have here is that it shares a beautiful confluence with that ascending trend line we just spotted. Now, if price breaks down the trend line and the 1.26 area, then it just gives us a sign that the trend line may no longer have a capacity to continue to negate the selling pressure, hereby giving us a signal to get ready to sell. Then we look out for a retest of structure on our lower time frame to join the downtrend scenario. Then we also have multiple levels that we can use to maximize the potential of this bearish momentum if price continues to drop to the downside. So it's a very simple setup here. Mark out this level, and we shall be using this as a reference point to guide our trading activities for today. So I don't know if you have any questions as regards to the current setup. If you have any questions whatsoever, feel free to drop them in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions, and before we move on to the next financial asset, and that you can take that time out to mark out these levels on your chart. All right, so I see a handful of comments here from Mystic. Thank you very much for your feedback. Torres Master, thank you very much. Good morning. Good morning to you too. Richard Blackett, good morning to you. Glad to have you around, and thank you very much for your feedback too. All right, everyone. So in the absence of no questions, I want to assume that we are all on the same page here. So we shall be moving right into the next financial assets on our watch list. oh my goodness, sorry. Thank you. Okay, I just got to see in the comments right now that I was not audible at all. I'm so sorry about that. So that means we missed out all of the things I discussed here. So I have to go back again and do a quick recap of what I said here. So I was talking about how the 1 hour time frame was in the last 24 hours, and at the beginning of the week I was talking about what we identified here, which of course we said we agreed that we are going to be using to guide our trading activities for yesterday, and one of them is the descending trend line we spotted here after connecting the lower highs in this particular market all the way to the downside, and we agreed here that this trend line will be one of the major parameters that we shall be using to guide our trading activity for this week. Then we also acknowledge the fact that right around our key level between the 1920 and the 1925, that this area is a seller's territory, and of course we want to be very cautious when we are around this area, as the likelihood of sellers coming in is very possible. We should ensure we move our stop losses accordingly when price action move in our favor. Then in addition to that trend line, we saw this range here where price action was initially confined, and that was between the $1,917.60 level and the $1,914.50 level, to emphasize the level of indecision at that point in time. And you all know how we use this kind of flag channel when we spot them on our chart. We want to exercise patience, waiting for a signal to trade only when we have either a breakout for buying opportunities or a breakdown for selling opportunities. And of course, I was mentioning here yesterday we had a sell position triggered, unfortunately, and this did not fall through, as we saw how the seller struggled for 4 to 5 hours and unable to break down that structure, to inside selling momentum. And unfortunately, we were in that trade and we were taken out in a loss. And during the XAUUSD live monitoring window yesterday, for those of us who are part of that session, we agreed here, I even updated it on my platform, that due to the emergence of buy pressure around this area, as sellers have found it difficult to break through this structure, we might likely be getting ready for an opportunity to buy. And immediately this was observed, we identified a level at the $1,916 level, which interestingly shares a confluence with that descending trend line we spotted earlier. And of course, when we have such a confluence, a breakout of the trend line, of course, is a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, and we anticipated buying around that area. And in fact, for those who missed out on that opportunity, the market was kind enough to come back and retest the structure to incite an uptrend continuation. And in fact, we were able to scoop in a significant amount of profit here, as we took advantage of levels such as the $1,917.60 level, and of course the $1,920 level, and of course the 1,924, which I later showed us yesterday before we went offline on the XAUUSD live monitoring window, giving us a significant amount of profit. For those who are part of this profitable journey, well done to you for being on standby to have capitalized on that move. So with that being said here, for those who have long-term position, of course, you still currently have a buy position running. And if you still have a buy position running at this point in time, I will suggest that you move your stop losses to lock in some profit at this point. And I'm of the opinion that anywhere above or between the $1,921.50 level and the 1,920 area seems most appropriate to lock in your position at this point. And remember that we of course want to give enough room for price action to breathe, in case we could be looking forward to the anticipation of another uptrend. So with a well secured position at this juncture, what is our next line of action for today? What is our plans? Are we going to continue buying the XAUUSD today, or is it likely that we begin to see some profit taking activity during the London and the New York session today? Well, the technical structure will tell us, but the first thing I would like us to do is to run through my commentary this morning on the XAUUSD and what I said we shall be doing to manage a trade on this asset. Now, for those who are with me on the TradingView and Telegram platform, you must have gotten this update, but for those who are not, we can run through this quickly so that we can be on the same page. So this is how we have been managing the XAUUSD since yesterday. So this was my commentary this morning about an hour ago. So I said here that the current market sentiment is increasingly aligning with a bullish momentum supported by the emergence of buying pressure around the 1,925 and the 1,920 zone, which was previously a supply area. This development positions us to seek additional buying opportunities above this level. Nonetheless, it is prudent to remain cognizant of the potential selling opportunities below this zone, as we eagerly anticipate key economic indicators from the US docket, such as the Housing Price Index, consumer confidence, and the JOLTS Job Opening. So today now, like I said, let's go back into the live chat right now. So things are looking, in the last 24 hours now, we've had a bullish momentum, which emphasized the strength of the buyers in this particular market, and of course has broken out of that descending trend line we spotted here yesterday. Now price is back into the seller's territory. Now let me run through the 4 hours time frame quickly so that we can all be on the same page here, which is a very critical moment in this particular market. Now if you look at the 4 hours time frame, despite the descending trend lines we have a supply zone here. As you will see, since the second week of this month, price action has remained below that area after it was broken to the downside, giving us clues of how sellers are strong around this area. So as a result of this, I labeled that area our supply zone. And in fact, if we see what happened here last week as well, despite the strong bullish momentum last week, we saw that price coming into the structure, sellers came in again to negate the attempt by the buyers to break out of that structure. So you would agree with me that we are within the seller's territory, which means that we need to be very, very careful around this area. Now, another thing about the structure is that price action is currently oscillating around that descending trend line that has been supporting the bearish momentum in the last couple of months. Now, in this situation here, you would agree that we are at a crucial moment in this market where anything could happen. So a breakout of this trend line will of course welcome buying opportunities, and a continuous selling pressure below this area could incite selling opportunities. Now with the scenario we have here, I needed us to see what things are looking like on the 4 hours time frame so that when I start explaining on the 1 hour time frame, we'll be on the same page. So now going back into the 1 hour time frame after seeing how important that structure is. Now, for me to continue buying the XAUUSD this morning, I would want to see price action break out of the 1,926 level. Remember, this is the highest point where price action has been so far this week. So we saw the first touch here during the New York session yesterday, and during the early hours of today, we saw selling pressure around this area, giving us signs that we might likely begin to see the beginning of a profit-taking activity, which could retrace back into structure before the uptrend continuation happens. Now, with this kind of scenario here, it's a sign that we have, and remember, we are within the seller's territory, of course. It lines up exactly within the seller's territory here. So we need to be very careful. That's why we needed to move our stop losses on any buy positions we have at this point. Now, looking at the structure closely and citing the breakout of this descending trend line, we all know that from a technical standpoint, when price action breaks out of a key significant structure, such as this descending trend line here, we expect that some point in time price is likely going to come back and retest the trend line area in anticipation of another uptrend. Now, if the supply zone that we have here, price action respects the supply zone one more time and sellers take over the market, I'm of the opinion that this could be a retracement back into structure. Now, where the retracement phase will end before the next uptrend continuation happen is what we don't know. So that is why we are going to be using the levels we have identified here to monitor price action, as depending on how price action reacts to this level will determine if when we are going to be joining the next uptrend. So we have levels such as the 1917.60, 1916, and the 1914, and of course the 1912 area, where depending on how price action reacts to this level will give us an insight if we are going to be getting ready to join an uptrend continuation. And what are the signs we are going to be looking out for around this level? Then we could be looking out for reversal patterns like double bottom structures, head and shoulder patterns, falling wedge, patterns that suggest that sellers are finding it difficult to break through that level. And to give a visual representation of what it will look like, it might look like price coming back into structure like this, giving us higher lows, giving us something like a double top, double bottom structure, breakout retest of neckline, welcomes an opportunity to join an uptrend continuation. So it could happen anywhere around these levels here. So let's just remain patient and see how the market reacts to that area. But of course, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates. And of course, if you are with us during the XAUUSD live monitoring window today, you will be part of us real time as we manage this position. Now, since we are talking about sellers potential at this point in time from this area, and considering the fact that we are within the sellers territory, we could see some selling opportunities, of course. And if you are a counter trend trader, a scalper, or a short-term trader, you might want to take advantage of this move. And that could be anywhere right below the 1922. So if we look at this, we have a minimum of about 25 pips to catch to a maximum of about 100 pips to catch here, depending on where price begins to reverse. So if you are a counter trend trader, a scalper, or you feel comfortable taking advantage of counter trend opportunities, then you can be on standby to capitalize on that move to that area. But for me personally, and for long-term traders, it will make quite a lot of sense that we wait and remain patient to see how price will react to any of these levels to give us an insight and prepare us to join the uptrend continuation, which is looking more of a long-term perspective here. So that is my view here on the XAUUSD for today. If you have any question, I do hope it looks a little bit complicated, but if we follow through with the current structure, it's very, very simple. And of course, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates if anything significant happens from this structure. If you have any questions anyways, drop them in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. If you still have any, you can still drop them. I will be checking the comment section from time to time. So with that being said, let's move right into the last financial asset on our watch list for today. So the last financial asset on our watch list for today is the USDJPY, and in fact in the last 24 hours nothing has really happened in this market as trading activity has remained range bound since the beginning of the week. Now let's run through how the week started for us, what we saw here, and how we said we were going to manage this position. So at the beginning of the week, we acknowledged some couple of trend lines, of course, and we actually acknowledged this one majorly as we said we were going to be using this one to guide our trading activity for this week. And you know how we use our trend lines. As long as price remains above the trend line, we want to be looking out for patterns and structures that support the idea of buying that asset. And not unless a breakdown of the descending trend of the trend line happens can we start considering selling. Remember, so yesterday while we were trying to decipher what our next line of action would be, we saw how price action was playing around the key level for the week at the 146.500. For those who don't know how we got to that point, please check my video on the USDJPY located right in the description box of the video, and you will see how we got the key level. And you know how we use the key level in this community. We always want to use as a yardstick to guide our trading activity for that week. Now if price trades above the key level, we look out for buying opportunities, and if price trades below the key levels, we look out for structures and patterns that support the idea of selling. Now, at the beginning of the week, we saw our price action was trading right around that key level, showing us how important it is, of course, and how indecisive the market is. And in fact, in that regard, we had a range identified where price was confined within, and that is the 146.620 and the 146.280 to emphasize the level of uncertainty in this market. How you know how we do it in this community? When we have this kind of range, we look out for buying opportunities at the breakout of structure, or look out for selling opportunities at the breakdown of the structure. Now yesterday we saw price break out of the structure at some point in time, but it never came back to retest structure as selling pressure came in, giving us an engulfing bearish candle to push price to the downside. And if you remember what we said here yesterday, we said that we were not going to be buying unless a breakout retest of the structure happens, because of how that level had been a strong selling niche in the last couple of weeks now. And in fact, that's the highest point price action has been in a while. And you know, when price action gets to a new high like this, there's always this level of uncertainty that comes in. There's the emotion of fear that price might crash anytime soon, and as a result of this, we see price action go through choppy situations, retracement phases, or even consolidation phases. And another thing from the fundamental aspect here is about the Bank of Japan's intervention. There is this phobia out there that the Bank of Japan could intervene anytime soon. And remember, last year is around the same price level that the Bank of Japan intervened. And because of all these parameters here, we have the situation we have. So I said for us to buy, we would need price action to break out, retest, confirming that truly this momentum is going to gain traction. But unfortunately, we didn't see that. Price drop to the downside here, going back into that range. Now we're finally seeing the breakdown of this ascending trend line. We've seen the breakdown of the ascending trend line. Now, what is it with the structure? Is it going to be a sign that we are going to be selling? Of course not yet, because one, look at the buy pressure around the support line here compared to the buy pressure here. You see it is higher than the one here. So we are gradually seeing something like a higher low going on in this market, and when we begin to see higher lows on our charts, it's a clear sign that buyers are gradually gaining momentum behind the scenes. And when that happens, it doesn't make any sense selling around this area unless price action does break down the support line, then retest of structure, then we can join a bearish opportunity here. If this does not happen, I don't think it is reasonable for us to sell below that descent or that ascending trend line. Now, with the way things are going right now, it appears buyers are still likely going to be dictating the pace, as they are the only one that have had an attempt at breaking out of structure. compared to the sellers. Sellers are yet to break out of the structure, and buyers are still showing more signs of trying to break out of that structure. They are getting closer to the structure than the sellers. Now, with this scenario here, I'm of the opinion that if this persists, then I would like to have a buy stop order above the 146.620, since we already had the breakout of structure before, and this whole move here could be seen as a retest or retracement back into structure to incite an uptrend scenario. Then another thing from the fundamental aspect in this market is the data that came in from the Japanese economy yesterday. Remember the unemployment rate, which we discussed earlier, and it came in at 2.7%, which is higher than the previous data and doesn't give sign that the economy, the labor market is expanding at all. And as a result of this, the US dollar may take advantage of this opportunity, since we are not seeing any signs that the Bank of Japan is trying to intervene at all. Even their monetary policy, whether the Bank of Japan's governor has said they are going to be leaving it unchanged. So as a result of this, it shows that there's still no activity from the government of the Japanese to intervene in this market at this point in time. Maybe the US dollar could take advantage of the poor data from the Japanese yen to break out of that resistant line to give us an opportunity to buy this asset. So let's position ourselves above the 146.620 to capitalize on an uptrend continuation. And please don't forget your stop loss is very, very important, as you want to be having your stop loss anywhere around that 146.400 area to around the 146.350 area, which will be dovetailed into about 20 to 25 pips stop loss depending on your portfolio size. So that is that on the USDJPY for today. It's a very simple setup. Price still remains within a range. We have no other choice than to exercise patience, waiting for a breakout of this range to give us a signal of where price action is likely going to be going, of course. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds thereabouts to see if there are any questions before we draw the curtain for today. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And it's on this note, I would like to call it a day. It has been a wonderful moment out here this morning. And in fact, we were able to take on 3 financial assets, of course, which is what we are monitoring so far this week: the USDJPY, the XAUUSD, popularly known as the gold spot, and of course the GBPUSD, all of which we use fundamental tools such as trend lines, key levels, and of course chart patterns to gain valuable insight into this market, and of course position ourselves strategically for today's trading session. So all we just need to do is remain patient. We allow our structures to mature before we jump into any position. And of course, we simulated all the potentials, opportunities that will happen today. We talked about it and how we want to be taking advantage of that opportunity. And of course, I will be with you in the comment section of both my Trading View and Telegram platform to give you an update on what we are going to be and how we are going to be trading them. Then I dropped the link to the XAUUSD live monitoring window right in the comment section. You want to click on that link click on the notify me button so that you will get notified as soon as we come online. The XAUUSD live monitoring window is a platform we initiated last month where we come here together to monitor price action real time on the XAUUSD. So basically, that is what it is all about. So you see how we execute trades, how we manage our positions, and how we get ready for more opportunities on the next move. So you want to be part of that session, click the link below, click the notify me button, and you will get notified. It begins about 5 to 10 minutes into the New York session. So I look forward to seeing you guys there. And please don't forget to support the project. If you found this content helpful and useful in making your independent trading decision, please don't forget to support this project with your thumbs up. Your likes are very valuable to me, and in fact it also helps the YouTube algorithm to promote the video to a wider range of traders who may find this content beneficial too. Thank you in advance for doing so, and for those who had liked this video so far, thank you very, very much for your support. I really do appreciate that. So it's on this note I wish you all the best of luck today, and do have a wonderful moment out there. We shall be seeing again right in the comment section of both my trading view, Telegram platform, and of course during the XAUUSD live monitoring window as we continue to monitor price action. Do have a wonderful day, everyone. Bye-bye.